Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Gene Massey, and he's Chairman and CEO over at MediaShares. Gene, welcome to the show.
Thank you, Adam.
All right, Gene. So we got a lot to talk about, but first off, hey, so you're going to the upcoming conference, am I right there? The Reg A conference, yes?
Yes, they've actually made it bigger this year. There are two things in online fundraising called Regulation CF and Regulation A, and those are two SEC exemptions for being able to raise money online. Both of them allow you to raise money from non-accredited investors. And so this year they added Reg CF to their usual Reg A conference. And let me tell you, it's going to be a huge event on June the 20th at the Westchester Country Club in New York. And all the big players in the business are going to be there, brokers, marketing companies. And this year they've done something unique in that they are adding companies that are raising capital. The companies that are raising capital get to come for free. And so they're going to have all of these people there that are raising capital. The nice thing about their conference is that it's very educational. So if anyone wanted to know about raising capital online, that is definitely the place to go.
And I think you're also a speaker, right? Correct me if I'm wrong. You're also going to be speaking at the event,
yes. Yeah? You know, I'll be moderating a panel on marketing secrets, because you can basically exchange the word crowdfunding for marketing, because that's really what it is. You post your offering on a platform or even on your own website now, and you have to market it to people. You have to get investors to come to your page in order to invest. So it requires tremendous marketing expertise and expense to drive the traffic of investors to your page where they can invest. So marketing is the key. So my panel is on success secrets. And basically, there are many companies out there that are getting money on their offerings. You post your offering on a platform like WeFunder or Start Engine or Republic or NetCapital, and you get a certain amount of money. Some of these companies are getting millions of dollars. And so everybody wants to know, well, how did you get that money? And so I put a panel together of 4 different companies that are going to talk about how they got their money. There's one company that spent $400,000 to only get $1 million. And there's one company that got $2 million and didn't spend any money. And so you get to hear the secrets of how people got their funding online. And that's what everybody wants to know. You know, if you're ever driving past these mansions, you know, in Beverly Hills, you say, don't you want to know, how do they get their money? I know I do.
Yeah, that's funny that you share that story.
You almost want to go
ahead.
From the door and say, excuse me, ma'am, can you tell me how you got your money?
Oh my gosh, that's funny, Gene.
So anyway, on crowdfunding, everybody wants to know, so you got $5 million. Really? How'd you do it? So we got a panel on that.
Yeah. Oh, that's amazing. You remind me of a story. Quick tangent. So I remember when I first moved to California, I moved to Pasadena, and I didn't know anything about California, really. Like, that wasn't, I'm from Michigan originally. I lived before that in Scottsdale, but I moved to, Pasadena, and I don't go too many places. I was studying for my CFP at the time. This is like years ago. And so I didn't really go out much or do anything much. So I was literally just in Pasadena studying for my CFP, and that was it. And I remember I accepted a promotion for the company I was at the time. I mean, I haven't managed money. I've been doing this for over 8 years, full time in media. But back then, I got a promotion to Century City, and I remember to another office. And I remember the first time I got off the freeway, and I started driving through like the big area in Beverly Hills. And I'm like, I moved to Beverly Hills, but I was in the little area, the poor side of Beverly Hills. But I remember the first time I went through all those houses, and I'm like, whoa, I had that exact feeling that you just said. I was like, I felt like knocking on the door. But that's amazing. I had to throw that out there. Random story, random tangent. What does it have to do with the upcoming conference? Nothing, but.
Well, we live in Brentwood, and we don't live in a mansion, but we live in Brentwood, and we drive by all these mansions all the time. And I was asking my wife the other day, can't we just go up and knock on one of these doors and ask them how they get their money?
Oh, that's amazing.
But speaking of money, that's what we're talking about here, is being able to get your money online. You know, for years, companies got their money from venture capitalists and from angel groups. And we make a joke now that's saying going to a venture capitalist office and looking for money is like going door to door vacuum cleaners. You don't need to do that anymore. Now everything is online. And of course, venture capitalists don't like crowdfunding. But so it's a different world now. A lot of money is being raised online.
Yeah. What do you think that does for the investor? Like, just from you've been in this business for a bit, like for investors and just and them having different access to different opportunities, like versus, maybe some things in the past.
Well, and even today, if you go to a venture capitalist and you want to get $1 million for your startup, and they love it. They think, you know what? You're a good guy. You've got a PhD from MIT, and you come up with this time machine, and we've tried it. We've seen people going back to 1850 and coming back and telling all about what it was like in 1850. So they've got proof of concept that their time machine works, and they know that if it really works, that you're going to make $1 billion. This is everybody's going to want to go back in time and see their old girlfriend when she looked good. And so. Well, guess what? Even if it's a fabulous deal and you're really smart, you've got your PhD from MIT and you invented this time machine, and they all love it, and they love you and your other team members, and you want $1 million, okay, we're going to want 30% of your business. And you go, what? Really? 30%? You want a third of the business for a little $1 million, even though it's going to be $1 billion company? And they say, yeah, but we don't know it's going to be $1 billion company. I mean, a hurricane could come by and blow the machine away or something, or you could fall down and break your neck, and then where would we be then? So if you want to give you $1 million for 30%, it's a big risk for them. So you take your time machine and you have testimonials of people that have gone back to 1850 and come back, and they met Abraham Lincoln and had a wonderful time, and they came back to tell you all about it. The time machine they've proven that it actually works, and a couple of people have even paid to go back to 1850. So now you have some revenues, and everything works. So what you do is you go post your offering on a platform. WeFunder, Start Engine, Net Capital, Republic, those are the top 4. You post your offering on one of those platforms, and you tell everybody about it, and you send out emails, and you do Facebook and Instagram ads, and you do all kinds of promotions and webinars, and make videos about it, and testimonials from people, and you've got all kinds of advisors from MIT that helps you make this time machine, and everybody looks at it and they go, damn, that's really something, a time machine that goes back to 1850. And so you go on there and you get $5 million for 5% of your company or less. There was one company that was on one of the platforms, and they had a new way to make solar cells that they could make them faster, cheaper, and they would actually produce more electricity, they said. And they had MIT again. They had MIT advisors, and you looked at the team, and they looked really smart. And they had all these videos of cutting laser cells and silicon cells with lasers and big pictures of machines and everything. And you thought, and they had all kind of testimonials of smart people, and they got $5 million on a $200 million valuation. Now, what that means is, what's the percentage of 5 million of 200 million? That's pretty small. That's a big difference between 30%, right? But they actually got $5 million on a $200 million valuation. And I told some VC friends about it. They said, "Get out of my office! Don't ever come in here again." $5 million for a $200 million valuation. Get out of here! And so that is the big difference. Now, that's of course an extreme exaggeration, but you can get a better valuation. One of the reasons for that is people that are investing, most of the time they're putting in $250, $500, maybe $1,000. Some people maybe put in $5,000 if you've got a really good deal. And they don't know, most of them don't know what the word valuation means. You know, it says 20, and they think if you've got a $20 million valuation, the company must be a better company. And they don't realize they're being diluted because it's a $50 million company. Oh, and they want $1,000. Okay, and they think because the valuation says $50 million, that it must be a bigger company, and it's not. It's just more diluted. See. So anyway, I don't mean to say that crowdfunding investors are stupid. I'm just saying they're not risking $1 million. And so they say, and most of the time it's something that's really cool, like a flying motorcycle or something you look at it and you go, and the motorcycle really flies. My God, look at that, you know? And so you look at something on one of these platforms and you go, wow, that's going to make money. And so you put in $500. It's not the end of the world if you don't get your $500 back, but a venture capitalist has to answer to his limited partners, and if he loses $1 million, he's going to be in trouble. So for sure, angels and venture capitalists, when they invest, as they have for many years, and they still are, of course, if you need a lot of money, if you need $30 million or $50 or $100 million, then it's a different deal. With Regulation CF, you can raise up to $5 million from non-accredited investors. With Regulation A, you can raise up to $75 million. Now, there's one advantage to Regulation A when you're raising up to $75 million is that you can also go public with it. You can also list on NASDAQ. And that's a real plus because most investors want to know three things. Number one, how do I not lose my money? How do I know for sure that you're not going to lose this investment that I'm going to give you? Okay. Number two, I'm going to give you this money. How do I know that I'm going to get a multiple back? Because you're a startup. You know, you guys are new. And who knows, this is not this is not General Electric I'm investing in. This is a couple of young guys in a garage. So I'm going to give you some money. So how do I know if it's successful that I'm going to get a multiple of my money back? I'm exchanging the risk for a multiple return. And then the third thing every investor wants to know is, how do I know when I'm going to get my money back? And so if you tell investors up front, we're planning an IPO, and within the year, we're going to have a listing. Oh, you're going to do an IPO? Yeah, not only that, but we will sell you shares at a discount to the IPO price. Oh, well, how does that work? Well, you buy a share now, and you can exchange it later for a discount of 30% to the offering price. So you can actually appeal more. It's more appealing to investors if they know there's going to be an exit. And unfortunately, in crowdfunding right now, the majority of the investments are having trouble with an exit. And they all say there are two things. You're either going to get the company acquired or you're going to go public. Those are the two big ways that you're going to get your money back. We're going to sell the company, and a big pharmaceutical company like Merck, they're going to buy us because we've got this new drug. Oh, okay. Or we're going to go public. One of those two ways. And unfortunately, a lot of the crowdfunding offerings now, I have not seen a lot of them going public. A lot of them, they get the money and they're not doing well. Sometimes they don't do well. You know, startup businesses, a lot of them fail. And that's a huge problem in the business world that are early stage companies. I've known a lot of entrepreneurs that really shouldn't have been an entrepreneur. They should be working for somebody else. They really shouldn't be the boss.
Mm-hmm.
It's risky.
Yeah, it is risky. And I'll just say, first off, this has been a great conversation. Just learning more about, and I mean, I know you're going to go into much more on moderating the panel and on speaking, and the conference is all about this. But that being said, we're about out of time for today's episode. If somebody wants to keep the conversation going, how do people connect and how do they learn more about MediaShares?
Well, MediaShares.com is a website. And you can go there and very easily connect with me there. I'm also on LinkedIn, Gene Massey on LinkedIn. You can connect with me there. We are primarily a company that markets these offerings. Sometimes we supervise other marketing offerings. The companies, they've already got a marketing company. We will very often marketing, and sometimes we will do it directly for them. I was for many years a TV commercial director. So I'm pretty good at videos and won a lot of awards from Clio and multiple tellies and New York Festival, stuff like that. So I'm pretty good at video. And every company needs a video. So that's something we shine at, I think. But MediaShares.com is the company. And I cannot tell you how grateful I am to be able to talk to you, Adam. It's really great. I love what you're doing. It's very, very much needed in the world to hear from businessmen and hear all the latest things.
Yeah. Well, appreciate you making some time for us and the platform to come on. And for the audience, just so you know, we'll put the links in the show notes so you can go and check out MediaShares and go further into Gene's company and also just to consume some of their content as well as we continue to cover the Reg A and crowdfunding conference. So big deal there. Speaking of the audience, if this is your first time with Mission Matters, this is a daily show. Each and every day, we're bringing you new interviews, new entrepreneurs, new executives, new ideas. Hit that subscribe button. We don't want you to miss any of the upcoming episodes, and we'll catch you next time. And Gene, again, thank you so much for coming on.
Thank you, Adam. Take good care now.